Good morning, guys. How's everyone doing? Out of the money puts are $9.80. I'm priced out of participating today. Hmm. There's always spreads to manage the volatility. I hope you had a coffee this morning. It's gonna be a long day. Yeah, I know. Use a different instrument. I mean, Ivy's gonna be relatively priced across all of them. But yeah, you could. A cheaper one. WeBull just warned me about MMM dividend because of my sold spreads. It's actually kind of clutch. I might get out and re-enter, avoid the risk. Okay. Dividends next week, right? That's Monday. Oh, maybe we get the drop today. I don't have to worry about it. Took a little bit of a hit yesterday. Don't particularly like the price it's trading at right now, though. Dollar's up ever so slightly. It's resistance at like 610, 615 on SPX. Yeah, can I get a chart this morning to update Pickles picks? Support at 5,600 though. Everything's mostly the same as it was last night. You are my sunshine, and keep it bright when I'm in fear of Jackson's Hole. It's a scary place. Life hack: if zero DTs are overpriced, just sell short strangles. It's free. I don't want to risk getting early assigned for someone wanting shares on Monday. I'll just sell them again afterwards. Alright. I don't think I have to worry about it. I've got some time on those. Got some 0 DTE 5685 for 45 cents a pop. Let's get rich quick. That's the most idiotic thing I've heard all day. But it's early. Can we talk about how aroused that NQ engulfing candle made me? I'd rather not. The day is young. Those 5685s are overpriced by 40 cents. What's up with IWM rocketing at open and then falling down the rest of the day? That's what it does now. That's like its new thing. Speaking of weird things. Ooh, nope, that's fucked up. Oh. Partnership follow-up. Today will be a big old-fashioned nothing burger. That's possible. Pre-market pump doesn't mean anything. We just moved back to where all the positioning got burned up yesterday. I would have preferred it at the end of the day yesterday, however. Oil had a nice bounce overnight, I saw. How much of everything is risk premium should probably be part of the question. Would you partner up with a delicatessen? No. FUBU launched a bare knuckle fighting championship channel. Bullish as fuck. Okay. Fellow hedge funds and banks, let's get it above 5,600. So it's going to be Powell saying, we talked about the totality of all the data, and we'll incorporate the totality in next month's decision. Bostic spoke this morning, and he said, this was my favorite quote of his from his speech this morning. Hold on. I list the range of potential Fed decisions from no cut to 50 points. Yeah, he also said the Fed's long-run policy rate at 3%. He didn't say if he was cutting or raising. He just said 50 points. Four minutes. Yeah. You know what? Wait, hold on.
I sip my coffee dark and strong. Prices rising with the sunrise. Each day's harder, feels so wrong. Jerome Powell, you're no hero. Not the man we thought you'd be. You're just a shadow of Volcker, Arthur Burns in our memory. I see the shuttered storefronts, places my granddaddy built. Folks are pinching pennies, dreams erode under the silt. You promised us salvation, but your silence digs our grave. Jerome Powell, where's the justice? Our homes we couldn't save. Jerome Powell, it's the path you chose to take. We're aching from inflation while you gamble on our fates. You'll never be a Volcker, your legacy will fade. Jerome Powell, we're all stuck in the mess you made. Families gather around the table, stretching meals that are too small. Mama's crying in the kitchen, hearing every child's call. You could have changed the story, eased the burden and the strain. Jerome Powell, we're all stuck in the mess you made. I remember when it all started, promises of skies so blue. Now we're walking in the shadows, wondering what you're gonna do. Every speech you mumble just leaves us in despair. Jerome Powell, we are waiting, but it seems you don't care. The echoes of your silence scream louder than your words. We're drowning in this struggle while your hope flies like the birds. You could have been our savior, but now we wear the chains. Jerome Powell, just a cautionary tale of a leader who refrains.
Goddamn son of a bitch. Alright, whatever. I'm not gonna play any more of it. Boo. Play Odorg. The abrupt end was the bond market crashing. Close the fucking door. We're gonna listen to the JPOW speech? Yeah. When it fucking starts.
Supply constraints have normalized, and the balance of risks to our two mandates has changed. Our objective has been to restore price stability while maintaining a strong labor market, avoiding the sharp increases in unemployment that characterized earlier disinflationary episodes when inflation expectations were less well anchored. While the task is not complete, we have made a good deal of progress toward that outcome. Today, I will begin by addressing the current economic situation and the path ahead for monetary policy. I will then turn to a discussion of economic events since the pandemic arrived, exploring why inflation rose to levels not seen in a generation and why it has fallen so much while unemployment has remained low. So let's begin with the current situation and the near-term outlook for policy. For much of the past 3 years, inflation ran well above our 2% goal, and labor market conditions were extremely tight. The FOMC's primary focus has been on bringing down inflation, and appropriately so. Prior to this episode, most Americans alive today had not experienced the pain of high inflation for a sustained period. Inflation brought substantial hardship, especially for those least able to meet the higher costs of essentials, like food, housing, and transportation. High inflation triggered stress and a sense of unfairness that linger today. Our restrictive monetary policy helped restore balance between aggregate supply and demand, easing inflationary pressures and ensuring that inflation expectations remained well anchored. Inflation is now much closer to our objective, with prices having risen 2.5% over the past 12 months. After a pause earlier this year, progress toward our 2% objective has resumed. My confidence has grown that inflation is on a sustainable path back to 2%. Turning to employment, in the years just prior to the pandemic, we saw the significant benefits to society that can come from a long period of strong labor market conditions. Low unemployment, high participation, historically low racial employment gaps,
BMG put their pickle in my jar, get back in the chair,
that were
JPOW3.
increasingly concentrated among those with lower incomes. Today, the labor market has cooled considerably from its formerly overheated state. The unemployment rate began to rise over a year ago and is now at 4.3%, still low by historical standards, but almost a full percentage point above its level in early 2023. Most of that increase has come over the past 6 months. So far, rising unemployment has not been the result of elevated layoffs, as is typically the case in an economic downturn. Rather, the increase mainly reflects a substantial increase in the supply of workers and a slowdown from the previously frantic pace of hiring. Even so, the cooling in labor market conditions is unmistakable. Job gains remain solid, but have slowed this year. Job vacancies have fallen, and the ratio of vacancies to unemployment has returned to its pre-pandemic range. The hiring and quits rates are now below the levels that prevailed in 2018 and 19. Nominal wage gains have moderated, and all told, labor market conditions are now less tight than just before the pandemic in 2019, a year when inflation ran below 2%. It seems unlikely that the labor market will be a source of elevated inflationary pressures anytime soon. We do not seek or welcome further cooling in labor market conditions. Overall, the economy continues to grow at a solid pace, but the inflation and labor market data show an evolving situation. The upside risks to inflation have diminished, and the downside risks to employment have increased. As we highlighted in our last FOMC statement, we are attentive to the risks to both sides of our dual mandate. The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks. We will do everything we can to support a strong labor market as we make further progress toward price stability. With an appropriate dialing back of policy restraint, there is good reason to think that the economy will get back to 2% inflation while maintaining a strong labor market. The current level of our policy rate gives us ample room to respond to any risks we may face, including the risk of unwelcome further weakening in labor market conditions. So let's now turn to the question
The time has come, but hasn't.
And why it has fallen so significantly, even as unemployment has remained.
The time has come, but it's data dependent.
There's a growing body of research on these questions, including Gowdy Eggerson's work, which we'll shortly discuss. And this is a good time for this discussion. It is, of course, too soon to make definitive assessments. This period will be analyzed and debated long after we are all gone. The arrival of the COVID-19 pandemic led quickly to shutdowns in economies around the world. It was a time of radical uncertainty and severe downside risks.
The time has come to continue to do nothing.
In times of crisis, Americans adapted and innovated. Governments responded with extraordinary force, especially in the United States. Congress unanimously passed the CARES Act. At the Fed, we used our powers to an unprecedented extent to stabilize the financial system and help stave off an economic depression. After a historically deep but brief recession, in mid-2020, the economy began to grow again. And as the risks of a severe extended downturn receded, and as the economy reopened, we faced the risk of replaying the painfully slow recovery that followed the global financial crisis. Congress delivered substantial additional fiscal support in late 2020 and again in early 2021. Spending recovered strongly in the first half of 2021, and the ongoing pandemic shaped the pattern of the recovery. Lingering concerns over COVID weighed on spending on in-person services, but pent-up demand, stimulative policies, pandemic changes in work and leisure practices, and the additional savings associated with constrained services spending all contributed to a historic surge in consumer spending on goods. The pandemic also wreaked havoc on supply conditions. 8 million people left the workforce at its onset, and the size of the labor force was still 4 million below its pre-pandemic level in early 2021. The labor force would not return to its pre-pandemic trend until mid-2023. Supply chains were snarled by a combination of lost workers, disrupted international trade linkages, and tectonic shifts in the composition and level of demand.
Ooh, tectonic.
Clearly, this was nothing like the slow recovery after the global financial crisis. Enter inflation. After running below target through 2020, inflation spiked in March
Is he reading
and
us a
April
bedtime story?
2021. The initial burst of inflation was concentrated rather than broad-based, with extremely large price increases for goods in short supply, such as motor vehicles.
He already said it's time to
My
cut,
colleagues and I
but
judged
no
at the
cuts.
outset that these pandemic-related factors would not be persistent, and thus that the sudden rise in inflation was likely to pass through fairly quickly
He's
without the
good
need
night
for a
mooning
monetary
us.
policy response. In short,
He's
that the
definitely
inflation
showing
would
us
be
his
transitory.
ass.
Standard thinking has long been that as long as inflation expectations remain well anchored, it can be appropriate for central banks to look through a temporary rise in inflation. The good ship transitory was a crowded one.
The good ship
With
transit.
most mainstream analysts and advanced economy central bankers on board, I think I see some former shipmates out there today. The common expectation was that supply conditions would improve reasonably quickly, that the rapid recovery in demand would run its course, and
we're
that
gonna
demand
laugh
would
about
rotate
it?
back from goods to services, bringing inflation down. For a time, the data were consistent with the transitory hypothesis. Monthly readings for core inflation declined every month from April through September 2021, although progress came slower than expected. The case began to weaken around mid-year, as was reflected
No
in our
cuts is
communications.
bullish, though.
And beginning in October, the data turned hard against the transitory hypothesis. Inflation rose and broadened out from goods to services, and it became clear that high inflation was not transitory and that it would require a strong response if inflation expectations were to remain well anchored. We recognized that and pivoted beginning in November. Financial conditions began to tighten, and after phasing out our asset purchases, we lifted off in March of 2022.
You mean selling
By
the
early
top?
2022, headline inflation exceeded 6% and core was above 5%. New supply shocks appeared. Russia's invasion of Ukraine led to a sharp increase in energy and commodity prices. The improvements in supply conditions and the rotation in demand from goods to services were taking much longer than expected, in part due to further COVID waves in the United States. And COVID continued to disrupt production
DT is below
globally,
101.
including through new and extended lockdowns in China. Higher rates of inflation were a global phenomenon reflecting common experiences: rapid increases in the demand for goods, strained supply chains, tight labor markets, and sharp hikes in commodity prices. The global nature of inflation was unlike any period since the 1970s. Back then, high inflation became entrenched, an outcome we were utterly committed to avoiding. By mid-2022, the labor market was extremely tight, with employment increasing by 6.5 million
50
jobs
against
from the middle of
5685.
2021. This increase in labor demand was met in part by workers rejoining the labor force as health concerns began to fade. But labor supply remained constrained, and in the summer of 2022, labor force participation remained well below pre-pandemic levels. There were nearly twice as many job openings as unemployed persons from March 2022 through the end of the year, signaling a severe labor shortage. And inflation
What's up, Jared?
peaked at 7.1% in June 2022. At this podium 2 years ago, I discussed the possibility that addressing inflation could bring some pain in the form of higher unemployment and slower growth. Some argued that getting inflation under control would require a recession and a lengthy period of high unemployment. And I expressed our unconditional commitment to fully restoring price stability and to keeping at it until the job is done. The FOMC did not flinch from carrying out our responsibilities, and our actions forcefully demonstrated our commitment to restoring price stability. We raised our policy rate by 425 basis points in 2022 and another 100 basis points in 2023, and we've held our policy rate at its current restrictive level since July 2023. The summer
They're
of
not cutting
2022
rates.
proved to be the peak of inflation. The 4.5%
He was already clear about
decline
that.
in inflation from its peak 2 years
It's
ago
time to
has
cut,
occurred in a context
but those
of
cuts
low
will be
unemployment,
data
a
dependent.
welcome and historically unusual result. So, how did inflation fall without a sharp rise
I have the
in
call sign of my
unemployment
straddle
above its
from
estimated
yesterday.
natural rate? Pandemic-related distortions to supply and demand, as well as severe shocks to energy and commodity markets, were important drivers of high inflation, and their reversal has been a key part of the story of its decline. The unwinding of these factors took much longer than expected, but ultimately played a large role in the subsequent disinflation. Our restrictive monetary policy contributed to a moderation in aggregate demand, which combined with improvements in aggregate supply to reduce inflationary pressures, while allowing growth to continue at a healthy pace. as labor demand also moderated, the historically high level of vacancies relative to unemployment has normalized primarily through a decline in vacancies, without sizable and disruptive layoffs, bringing the labor market to a state where it is no longer a source of inflationary pressures. A word on the critical importance of inflation expectations. Standard economic models have long reflected the view that inflation will return to its objective when product and labor markets are balanced without the need for economic slack, so long as inflation expectations are anchored at our objective. That's what the model said. But the stability of longer-run inflation expectations since the 2000s had not been tested by a persistent burst of high inflation. It was far from assured that the inflation anchor would hold. Concerns over de-anchoring contributed to the view that disinflation would require slack in the economy and specifically in the labor market. An important takeaway from recent experience is that anchored inflation expectations, reinforced by vigorous central bank actions, can facilitate disinflation without the need for slack. This narrative attributes much of the increase in inflation to an extraordinary collision between overheated and temporarily distorted demand and constrained supply. While researchers differ in their approaches and to some extent in their conclusions, a consensus seems to be emerging, which I see as attributing most of the rise in inflation to this collision. All told, the healing from pandemic distortions, our efforts to moderate aggregate demand, and the anchoring of expectations have worked together to put inflation on what increasingly appears to be a sustainable path to our 2% objective. Disinflation while preserving labor market strength is only possible with anchored inflation expectations, which reflect the public's confidence that the central bank will bring about 2% inflation over time. That confidence has been built over decades and reinforced by our actions. That is my assessment of events. Your mileage may differ. So let me wrap up by emphasizing that the pandemic economy has proved to be unlike any other, and that there remains much to be learned from this extraordinary period. Our statement on longer-run goals and monetary policy strategy emphasizes our commitment to reviewing our principles and making appropriate adjustments through a thorough public review every 5 years. As we begin this process later this year, we will be open to criticism and new ideas while preserving the strengths of our framework. The limits of our knowledge, so clearly evident during the pandemic, demand humility and a questioning spirit focused on learning lessons from the past and applying them flexibly to our current challenges. Thank you.
So nothing? Yeah. That's how it went down.
In a town where trains pass slowly, I sip my coffee dark and strong. Prices rising with the sunrise. Each day's harder, feels so wrong. Jerome Powell, you're no hero, not the man we thought you'd be. You're just a shadow of Volcker, Arthur Burns in our memory.
It's like the bond market doesn't believe him.
I see the shuttered storefronts, places my granddaddy built. Folks are pinching pennies, dreams erode under the silt. You promised us salvation, but your silence digs our grave. Jerome Powell, where's the justice? Our homes we couldn't save. Jerome Powell, it's the path you chose to take. We're aching from inflation while you gamble on our fates. You'll never be a Volcker, your legacy will fade. Jerome Powell, we're all stuck in the mess you made. Families gather around the table, stretching meals that are too small. Mama's crying in the kitchen, hearing every child's call.
I don't believe you.
Could have changed the story, eased the burden and the strain. Jerome Powell, we're all stuck in the mess you made. I remember when it all started, promises of skies so blue, Now we're walking in the shadows, wondering what you're gonna do. Every speech you mumble just leaves us in despair. Jerome Powell, we are waiting, but it seems you don't care. The echoes of your silence scream louder than your words. We're drowning in this struggle while your hope flies like the birds. You could have been our savior, but now we wear the chains. Jerome Powell, just a cautionary tale of a leader who refrains. Of your silence scream louder than your words. We're drowning in this struggle while your hope flies like the birds. You could have been our savior, but now we wear the chains. Jerome Powell, just a cautionary tale of a leader who refrains.
Did you stop out of your straddle call? Yeah. Which I'm sure I'll regret. This is the first time listening to this one. I'm usually on Discord. It's amazing. Can't get enough of your own song. It's a good song. Well, the bond market thinks he's cutting, and the equities market isn't sure. Yay, dollar destruction. Well, the dollar's recovering a little bit. It was under 101. Did the back end of the yield curve go up a little bit? Like in the last 5 minutes. Didn't he say something like change in policy is necessary? No, he said something like it's time to cut, but cuts will remain data dependent. He did not, in fact, grow a pair. I mean, he did the thing that he was supposed to do, right? Which is not do anything. Have bulls call spreads at spot for September? Okay. Positioning on Tulio is still the same. It needs to break above 61 to run. It's only got like $5 of range on it, but it still needs to break above 61 to get there. USD tanked and now starting to recover. Technically, doing nothing should be bullish here. How are tips looking on Fuberto? Not so great. Flat. They could get better, though. Still a lot of buying on it. I think yesterday it didn't trim either. A little bit of Delta fell off yesterday, but Gamma picked up again, even more. Gamma's actually almost at its highest level since it ran in August of 22. Delta is definitely not. Let's see what we're looking at here. Oh, God damn it. IWM to 230 by next month. I could see IWM getting back to like 225 by the FOMC meeting, provided the market doesn't tank, like tech, specifically tech. Our next big data point is going to be what, like ISM PMIs. Well, durable goods is Monday. That's going to be important. The 2-year note auction is going to be important. So is the 5-year. GDP next Thursday is going to be huge, especially if it falls. And if inflation was up on the last report, GDP should be down. Core PCE is not going to matter much. ISM PMIs aren't until the beginning of September. And that's when we get jolts also. We'll also get the now revised unemployment numbers after the BLS revision. Do we still have the pullback before the move to all-time highs? I mean, positionally where we're at right now is bullish. We could fail this test of like ES 50, like the 5660 level. If we do fail again, we could pull back to trend, which would be around like 55.74. We would need 74.75. We would need to lose 55.34 to reverse from the top here. But he's not cutting, right? And that should be mildly bullish. I think the problem with that is the bond market and FX markets don't seem to believe that. Like equities are definitely on the he's not cutting path, at least so far today. But the dollar is dropping really fast. But I feel like this ends just like 07, 08, probably. History doesn't repeat, but it rhymes. Positioning probably has shifted higher over time. That was like a month ago. Positioning changes every day. Actually, the top of the call chain hasn't really moved much since it gapped up. Looks a little bearish. Well, there's like calls at 75, which it's kind of just sitting on. Vol is coming down really hard though, on like the 30-day. So it's possible those are starting to get sold. It wouldn't get bearish unless it fell back below 70. But if it does fall back below 70, I'd watch out. I wouldn't say that there's enough options interest on the chain to really make that much of a difference. Like, all that really matters on it is that 70 strike. Let's carve on out to that. 157.18. Yeah, the top there is like 157.50, 160, which is kind of where it's sitting. Vol is coming down on it, but not a ton. There's still the biggest problem with Carvana is there's a shitload of support at 155. I don't think short dated put hedges are worth it unless it loses 70. What happened with the Japan meeting today? Uda said they'd raise again. He's pretty hawkish right now. The problem is a bunch of the other members of the BOJ don't agree with him. Is that the hot new sitcom, that 70 strike? Why is IWM going up? I thought no cuts, bearish for small caps. The belief in no cuts seems to be mixed. The bond market's pretty rapidly pricing in cuts or Fed fund futures. The hedging from that will probably end up being bearish on equities. IWM and Dow should be least affected though. And a slow pace of cuts isn't bad for IWM, right? Rapid cuts would be very bad for IWM. So Fed fund futures are waffling between pricing in rate cuts for a recession and pricing in rate cuts for a soft landing, right? A soft landing rate cuts would be, 25-point step downs very gradually, right? Over time, maybe end of 2025, right? A recession would be like, cut 50, cut 50. Beginning of 2025. And this will be dependent on the labor data coming up in like a week and a half. So we're not in too much of a different position than we were yesterday, right? Where, the bond market's kind of disagreeing heavily with the equities market. And leverage is still going to be hard to come by because the dollar is dropping. But yields are up, so there's some additional leverage in like the top end of the yield curve, and bonds, not so much bills. I mean, most of what's benefited the indexes is that they rocketed up prior to any kind of news or announcement, right? So you'll find that into almost any data over the last, at least this has been true over like the last 9 months, right? Into any data that is important, the market will mean revert to the bullish positioning. So if you look last night, the bullish positioning all got burned yesterday, but it was at like 56.15 out to 56.40, right? And that's exactly where we went overnight. So we closed low below GM, right? And then the overnight session pushed us up to 56.05. This morning pushed us up into the bullish positioning before J-Pow ever said a fucking word. This happens with almost every data set. CPI, PPI, unemployment or labor numbers, FOMC meetings and speeches. I did. I said this at the end of the day yesterday. I was like, wow, I really wish they'd just pushed it back up during market hours. I wish I heard you say that yesterday. That's okay, the options were already overpriced. The opposite is true, when people are scared and we're below delta neutral, right? The market will mean revert to the bearish positioning, which, I mean, it doesn't happen often, right? Because markets tend to be mostly bullish. But we got a bit of that, shortly after we bottomed, right? Before the Japan decision, right? We mean reverted back to the concentration of bearish positioning. So we rose and then pulled back to the bearish position because we were still under delta neutral. And then Japan was like, we're not going to do shit. Market rocketed. The small caps have all the debt compared to tech. Why would quick rate cuts be bad? Because financial conditions will tighten. The top end of the yield curve will still go up. What you're assuming, right, is that the yield curve is going to go down equilaterally, and this is where a lot of people are wrong about how rate cuts are bullish. Okay, that's not what's going to happen. Right? The front end of the curve is going to move down. The back end of the curve is going to move up. This is going to happen for two reasons. One, nobody's going to want to buy any short-term debt. Like 3 to 2 years is going to suck. Nobody wants to buy fucking especially after everyone's been underwater on low, like, overpriced treasuries. No one's gonna want to buy these sub 5%. And so they're going to start, looking out here to buy. And this is where the treasury is going to issue. And it's not good for the banks because the treasuries they're holding, like the securities they're holding, have such a fucking low interest rate. No matter what we cut to over the next year, they'll still be underwater. Could you draw some lines on Fubo? I don't know if there's any lines to draw on Fubo. Oh, that's MES. Hold on. I mean, either it's gonna break out, right, or it's not. This isn't, ascending triangles aren't very bullish unless they break out, in which case they become extremely bullish. Finding support this morning was a big deal. If it breaks, looks like if it breaks $2, and I would still say 220, 225 is needed for it to move higher. But if it does, I mean, that's going to open up a lot of Vega risk. And the market maker is going to be forced to start pricing up the delta on the $2 contracts, which is a significant pile. Do you notice JPAL said the labor market is strong and not the SOM rule? I did. Well, it's only a rule when it's a rule, and then we can ignore it because Claudia SOM's bullish, right? So it's like fine. It's what I don't understand is why everyone is still overweight equities with so much uncertainty. Well, they're not really like institutions aren't really overweight equities so much as they are long volatility on equities, right? Retail's overweight equities, but institutions are in the dispersion, right? They're short vol on the index, long vol on the underlying. So their exposure is leverage and options, and then retail's exposure is stock. And the leverage and options drive the price of the stock up, which causes more buying by retail, right? More mutual funds, more active managed funds buying in order to, even if they're just buying in order to maintain weight with the index. So don't worry, they know not to get on the rug. Your favorite institution might survive. JPL legit ignores real-time data. He's always a month behind, and it's hilarious because they don't want to discuss the current data unless it's in line with their narrative, right? Yeah, Sam was running around for years saying it's 100% accurate, and somehow now it's not. Well, that's because she's been like super bullish on the economy and a soft landing for the last like 8 months, and really publicly. So she either says, "Oh, I'm fucking wrong about everything," or she's like, "Oh, my indicator is wrong because of this, you know, like tertiary case where these two data sets aren't lining up like they did in the past." Because like most economists, she's a number philosopher, like a numerologist. That's a shill move. stop limits getting filled for 20 cents under the set limit? That's not how a stop limit works. You have a stop and a limit. They're two separate orders. So if you have a stop at $1 and a limit at 80 cents, you can fill at any price in this range. I thought you'd like that analogy. I didn't forget it. Jape has a good. Thanks, Gherkin. Your levels killed it from Pickles Picks. Hope you have a great weekend. You too, Poopy. What's the downside for public to just dump equities and load up on bonds here, as rate hikes seem less likely than cuts? That's going to take something catastrophic to get people to exit equities after this year's performance. And by the time they do, it'll be too late. Who's the captain of the good ship Transitory, and what is he going to be keel-hauled? Whatever happened to numerology, Mike? I miss that guy. He was the right kind of crazy. Bulls seem to be chilling. If we lose 20, things get more bearish. But really, 15. 15's probably more important. There's some profit taking there. Yeah, 15, 20. Seemed like yesterday, like 56.13-ish to squeeze short puts. Are WeBull's IV rank numbers accurate? Probably not. Most brokers lie about implied volatility. 99% IV rank. That's got high IV. I'm not seeing tons of put volume with all this bouncing. That's probably bearish. Why aren't bulls pushing this harder? Because there's nothing bullish happening. It's a shame I full ported my 401k into China names 2 weeks ago. Leo Keck. What did you do, Poopy? Why? Motherfucker. Why would you ever go long China? What are you, Ray fucking Dalio? Ray Dalio had to start an entire campaign to get out of his fucking positions. Weak dollar? That doesn't benefit China when fucking their entire economy is collapsing. Oh, Jesus Christ. China can't bail themselves out. The sheer amount of Alibaba ads I get for a small business I do not own, China's gonna dump hard. It doesn't matter if the value of the yuan increases. Where else are idiot fund managers going to put their money when the dollar dumps and U.S. equities dump? Commodities. Dollar-denominated commodity. What the, you know this. Okay, Poopy Pants, I'm going to blow apart your whole thesis here, and you're going to hate me. Okay? But all of China's money comes from us. Now, it is. No, it is. You're wrong. No. So what you're saying is deep value? I'm saying you probably bought the top of what's going to be like a 15-year depression. China has the perfect trifecta. They have debt nobody wants, a collapsed real estate market, and skyrocketing unemployment. No, they have a declining birth rate. They have too many old people, not enough young ones. And all the young ones have no jobs. Poopy, think Soviet Union 1970 through 89. We already blew through the sold, well, some of the sold puts. We'll blow through more if we lose 5,600. That's like way worse. You know, Chernobyl probably had a lot to do with the failure of the Soviet Union. It was very expensive to fix that. Like, way, way worse than my baseline worst case. I'm sorry. China's only path forward, probably, to recovery is to start a war that they can't win. And in doing that, they're going to risk all of their international assets, right? We already showed what we do to aggressors with Russia, right? You get cut off from SWIFT and everyone liquidates your assets to fund your enemy. And then charges your enemy interest on that funding. It's genius, don't get me wrong. It's a whole new way of waging war. But BRICS is bullshit. Saudi Arabia is never giving up their dollar printers, okay? You can't shit on Instagram models with rubles, okay? It's just... American way. I know a decent stripper that takes BTC. Turd, you have like 7 kids and a wife. Don't bullshit me. Was today's data neutral enough to justify another push attempt for all-time high next week? No, the bond market doesn't believe J-Pow. And it's hard to believe him because he didn't say anything, right? Mm. If you think Powell will actually cut, then yeah, it could be a decent hedge. I'd probably want something leveraged if I was going to try to hedge short-term yields. I don't need to. I have like 50% of my money in 3 to 2 year bonds, but yeah, I mean, I would probably want something leveraged on bills. But I would want the fuck out before FOMC because if he doesn't cut, oof, fuck. 3 month to 2 year. Greg, are those margined? No, no, no risk on them. They're just fucking turning over cash, right? No, they're not. I don't have any. I have some 20 years that I have leverage on. But I sold most of them. Nothing on the cash. It's just like my own fucking money market, right? I bought a 0 TT QQQ Strangle 10 rounds before JPOW for 700. I just closed the put side a couple of minutes. I go for a total of 62% profit. Absolutely silly. Straddles are awesome. Gherkin, I have to shit fart so bad, but there are guys renovating both of my apartment bathrooms right now. What do? What kind of contractor did you get that's doing both of your bathrooms at the same time? Shit on the floor in the bathroom. I could use one of the litter boxes, but last time I did that, my biggest cat shit on my desk. It wasn't my choice, it's my apartment building. Shit in the hallway. If you need help, Carl, I'll tell you how to do it. Maintain eye contact with them? I mean, what the fuck are you supposed to do? That's the stupidest shit I've ever heard of. Just get in the shower while they're in the bathroom renovating and waffle stomp it into the drain. Yeah, desperate times call for desperate measures. Kendro just found out that Ko-Fi talks now, and he's working on his masterpiece. Carry spread's getting tighter. Ooh, dispersion's starting to turn around. Forward yield on vol staying positive. Yield curve's not uninverting yet, though. But the 2 year is dropping pretty fast. Dispersion bearish or bullish? Bearish if it breaks down. Like if correlation goes up, that's not good for tech. Dixie may get to double digits today. That'd be bad. So people are buying the 2 year bond. What are the chances of my free put legs printing today? Moderate. It's going to be hard to lose 5,600. It's very supportive. But if we do lose 5,600, we can drop really hard. 55.75, 55.50. We already lost it a little bit. And they sold more puts at 5,600. If we don't hold, those puts will squeeze on the next test, right? Those puts are a downside liquidity push, right? If we move down, yeah. They could hold. If we don't get enough momentum to squeeze them out and they hold, we'll probably just chop between like 15 and 5,600. We've got to push down into them and squeeze them off, which is tough. It's a big position. Ugh.
Kendra Wilson put their pickle in my jar. Hey sensei. Words to live by. If it looks like Chet, smells like Chet, and tastes like Chet, it's prob Chet 3.
Alright, yeah. It probably is Chet. He's testing it. I feel like I got a new toy for Christmas. Quick, increase the Ko-Fi minimum to $100. No. Did Powell seem to tell the banks, hey, we'll keep the pace slow, data-driven, don't worry? Yeah, that's what he said. He was like, it's time to cut if the data supports it. He was very clear. The Fed intends to do nothing. Okay, awesome. Which should be bullish, except the bond market's not buying it. Is that why oil's up bigly? I mean, partially. Ooh, new home sales went up a bunch. What else have we got? Building permits. Up a little. Still down 3.3% month over month. Interesting. So home builders are dumping inventory. Seasonally, the housing market's doing super shitty, and no one seems to be questioning it. No volume on the reversal. It's not got a lot of volume. But it's, I don't know, we could just chop here. I'm not even sure 5620 is that much of a resistance, though. Like, up a little higher, we have a lot of sold calls, but, like 20 to 30 is mostly bought. And there's resistance at 35. I would have preferred a rejection below 15 to stay bearish. And then loss of 5,600 bearish, like actually bearish. Charm levels still hold true. So on the intraday now, the positioning's moved around a bit. Give me a second, I'll let you know. Rejected at 20. Yeah. Interesting. Lost 56.15. Maybe hope. Why are we getting hard drops, $10, $30 in a couple minutes, followed by slow grinds back up? It's because of how things are positioned. There's not a lot of market maker support here. SPX, the SPX chain, the monthly chain, which is usually where support is found, is pretty weak at these levels. There's not a lot of upside delta. So delta to the upside kind of goes like this. And this, we're like right here. There's a little bit at like 56.15. There's a little bit, you know, at 5,600. But most of the delta, the majority of delta, is in the money. And if there's no delta out here, if price pushes up, right, then the market maker is not really adding a lot of delta to their hedge. But if it falls, they're selling a lot of delta, right? So the downside moves are more extreme. And most of our moves up are on gamma, because the positioning that is supportive and is bullish is very short dated. I mean, even now, the positioning past 56.15 is it's like 0 DTs. Snicker, this thing's about to rip through everything. Source, huge support found on ES 56.25. It's not necessarily about to rip through everything, but they're going to try to pump. A lot of buyers.
J. Stell put their pickle in my jar. I have gone past my expiration date and am returning to my home planet of Hugh Jerazakrak. One love and Jelk forever moi BAE. Formerly J. Fresh. 3.
J Fresh has changed his name to J Stale. Huge hairy crack. Thank you for the Hal Bull put spreads. They were awesome. 40% return in a week. Nice, man. I was pretty happy about him. Missed this morning. Was JPOW otterish? Yep, extraordinarily so. That's what he excels at. What level full bull? Oh, 30's resistance. 30, 35 or resistance. So, I don't know. I don't know how much full bull we get. There's sold calls 40, 45, 50. I guess we could squeeze them. That would be probably the most bullish outcome. However, I don't know if this pump is going to succeed. It's really coming in on nothing. There's like nothing to support it, right? They're just trying to push the slight turn in leverage as much as they can, and get the forward yield on vol down, but dollar's still falling really fast. Pricing in 0.92 rate cuts now. Still holding a put side 0 DT, but it's paid for. Yeah, I mean, that's all you care about, right? Like, if you have a straddle, like an overnight straddle, and this is, I mean, this is the days when they're the best, almost. There's very few instances where you'll get huge, like, morning swings, and they pay off huge, but, generally the best outcome is just like 100 BPS overnight, right? You don't care what fucking direction it goes in, just 100 BPS. And you know your puts are more than paid for, and you make profit on the call side. Occasionally, you'll get a day where you get like 60 up at open, and then it falls. Those are awesome too. Or vice versa, right? Open low, bounce. The only thing you don't want is flat. But that can be hedged off. There's a lot of things you can do with like super low volume flat days. I was scared to pull the trigger on the drop and missed out. I'm going to work. Now, have a good day. Later, man. Hopefully we'll be back for 15 minutes extra later. Ooh, what's PAX doing? Oh, fuck yes. Nice. Is that what all the pigeon whales do? Buy an at the money SPX put and call 7 DTE? No, if they did that, they'd be far richer. Also, 7 DTE is a bit much. You don't really want that. Managing theta on straddles is difficult. You don't want too much. Can you just buy a couple thousand Fubo $2 call leaps so we can just rip? Why would I buy $2 leaps? I could. $1.50. I don't want to. Why? I don't want that. Gross. Yeah, guys, hold on. Let me be your exit liquidity. Pigeon wheels are capable of both, Kendra. The pack's fucking ripped today. They're doing really good. To be fair, the chat was your GME covered call liquidity for years. I taught you guys to sell covered calls. Are you still playing COF? I still have some runners, but I closed most of it earlier this week when it got above 141. I think I have like 2 contracts left. COF fucking killed it. I think everyone just ignored that play. Not me. Nice. You got it too. There's certain tickers that like people just aren't interested in. Like boring shit like Schlumberger and Howl, like bull calls. Like I think like one person played them. Or the bear bull pip spreads. That was like a 50% return. COF's huge. Focused on indexes, enjoying the tax advantage on gains. Can you look at SMCI? It's how I paid for all the puts I lost money on. Oh, okay. I made $13 on the Howl play. What's up with the idiot neutral trades? What about him? Would you ever consider providing updates to older plays? No. Absolutely never. Which gap first? 5616 SPX or 19776 NDX? I mean, NDX should be a little bit weaker here. Most of the strength in S&P is coming from breadth. So the overperformance in tech right now is a bit out of pocket. I'd say if weakness is gonna show up, it's probably gonna show up in like NQ first. I look at Gherk's pickles pick PP every day, and I just know they'll never size up. Do we crash or MOASS and JPEG doesn't raise in September after all of this? That's a good question. UST leverage will go up, but leverage will move back into the carry. We might get some volatility, but we'll probably stabilize if he doesn't raise rates. AI still doesn't make money. We're only a year and a half in though. NDX is the SPX of is the SPX of NQ. Kirk's PP safe marriage. IWM going for 225. That's what I said earlier. We do have fun. You can take a look at Google. Yeah, sure. I actually just got out of a Google play not that long ago. Google looks kind of bearish. At least the daily does. I'd say a loss of 165 is probably really bad. Are you extraordinarily quiet, or is my audio fucked up? It might be because my mic was on like the other side of my desk, but I just moved it back. Sometimes it's weird having like, you know, like a dick-shaped object in your face all day, you know? Unless you're into that, in which case, yeah, no kink shaming. Okay, I'm not sure I understand what you're getting at. Well, Dave, as a urologist, you've acclimated yourself to it, right? What's a didildo? Diddledo? It is one of the perks. Both my puts and calls are red. Which one's gonna go green first? Hmm. Resistance at 30. Well, 30, 35. I don't know. I guess we could squeeze some short calls. We need momentum on the buy side, though. What could you see SPX closing at today? Yeah, if we don't fail 30, I don't know. There's a ramp up to 50, but it's on the back of short calls, so it's risky. I doubt higher than 50. And we could reject here. If we do, we probably go back to like 15 or like 5600 to 15 range. Gamma to the downside's positive, but it's very flat. There's really not a lot of resistance if we get rejected. Or well, support. We're getting some sold puts at 35.40. Not a lot of sold calls coming in. So bulls probably want to try to push like up to 45. At least that's what they're trying to position for. Which I think will be successful if we don't get... Yeah, so, I mean, I would look to 30 for a breakout. If we break out at 30, we probably don't go over 50. If we fail here, back to 2015. I don't really know where I'd confirm the downside move, though. Maybe 25. 25 or 23. Isn't there leverage evaporating real quick? It's so UST values are going up, but leverage in the carry is going down. This is going down at a greater rate than this is going up. but these need to be marked to market to cover the leverage over here, right? And so there's, I mean, obviously not everyone's exposed exactly the same way, but I would say the majority of exposure is experiencing that right now. At what point should we consider a failure of 30 to no longer be feasible? What do you mean? We're not even over 30 right now. We technically already rejected off of the 35, like the attempt at 35 twice. I would say that we're probably closer to a small pullback here than we are to a breakout. Some of that'll be dependent on futures and probably also on like NQ. Which is kind of where some of this weakness is coming from. Like, then SPX has support from both like equal weight today. Like equal weight SPX is doing really well with the move in small caps and mid caps, and then also oil's up. So I think SPX is better supported than NQ. So if we're gonna get a sell off, it's probably gonna start like over on NQ with like a failure of VWAP. You shouldn't underestimate anybody. Everyone underestimated the Bears yesterday. And they drove that shit into the dirt. But I mean, there was also a lot of profit taking yesterday before today's announcement. What's the NQ ticker for WeBull? It's NQ main. But make sure you have live data on it. What's up, Clueless Calls? I used a handheld bidet for the first time today. It was a life-changing experience. Nice. That's weird. Apple looks kind of weak. The video looks okay. Meta doesn't look too hot. Microsoft doesn't look great. How's Amazon doing? We'll re-enter that if we start to move up. Still back above 180 though. I have earnings on 9.5. Hmm. I sold about 20% of my Fubo calls, so prepare to rocket. A little bit of volume on it. Doubt this rejects. No, that was a breakout. This might reject. Which would be awkward after everyone got stopped out. Alright, give me a second. Hey, we failed at 35. Perfect. 5,600 is strong support. Yeah. It was going to be a little weaker on the second test, but that's a good one. Sorry that took so long. I was trying to make food and then I fucking got a phone call and Fubo almost did it. Yeah. Kind of close. Idiot trade here? No. And it was too risky to open it higher. No. Oh my god. Yes. Woo. This is awesome. Ooh, that is kind of bearish as fuck. Someone's picking up some deep in the money puts. Holy shit. Is that 5,600? $5,700? What the fuck are those? Someone just bought a fuck ton in the money puts. 5,650. Yeah. I can't fucking see that. 60. 5,660. How many? A bunch? Those are debit spreads, huh? Interesting. Back to all-time highs? Wow, this doesn't look good. You can buy in the money puts? I thought you should only buy way, way, way out of the money. I think they're just taking advantage of the arbitrage on the spread. So, you know, I might not actually be able to show you guys this, but I'll try. So, all right. Say you want to sell like the 65, buy the 60, right? Or, you know, sell this like this. Sorry. Nope, that was right. Oh, wrong? Wrong. Like that. I think that's what they're doing. So it's not like a ton of money. But if this cash settles, you make 40 bucks, right? A lot of risk for little gain. Well, yeah, but your chances of being see how the spread's weird. If you hit it on the spread, it becomes a very decent gain for very little risk, right? So if you can get these at like 90 or $100 or 125, right? All of a sudden really fucking good. I'm not a billionaire. Do you think I tell my family that I babysit degenerate traders all day? No. Yeah, true. You invest in a private school for regards. I don't run a daycare. I'm a partial owner of a daycare. Like a silent partner. We had to pick one pickle jar member to have over for Thanksgiving. Why would it be Kendra? It wouldn't. I only want stuffing in my turkey. I'm part of the daycare. Woo. Daycare or Montessori? I don't know what the fuck they do. They have some special teaching system that parents overpay for. Oh no. What have I done? Oh, that's weird. You get paid a regular dividend out of the daycare? That's a percentage of profits. Net. Nope, something's broken on my computer. Hmm. Stop asking me about every $3 price change. Bull's getting desperate to try and hold this? I don't know about that. You just, oh, I disconnected on Discord? What the fuck was that? Hmm. Alright, let's see if that's working. Alright, can you guys hear me now? Is that good? I hope so. Cool. Sorry about that. My computer started doing weird shit. I think the TradingView memory leak finally got enough RAM to come to life. Yeah, look at that. 12 megabytes. You go, girl. All my homies hate how low open to close SPX variance is. Oh yeah, it's so terrible. Your ex-wife pisses ice cubes? That's insane. TradingView's been tanking my PC lately, even worse than usual. Yeah, it's a big piece of shit. I don't want to be explicit or gross. Why? Who said that? Ban? This is interesting. I wonder if we end the day at 55.86. Exactly where I predicted. Do we fill the gap, though? And then close at 86? I don't know. Stream chat and the dick sword? Wait, what? I don't know how to automate them. They're just 100% interpretive. There goes 5,600. Any squeeze potential to the downside? Sure. But it's like, not really. We already fell through most of the sold puts. I will say it's going to be obscenely hard for us to get back above 5,600. My only problem is I don't know if we go much below 5,600. It's just going to be hard to go above it. Like 5,605 is all sold puts, 5,600 is all bought puts. And it's a lot of them. It's like bot puts, sold calls. Bot calls? Ooh, bot calls, sold bot puts. It's both. That's fucking awkward. This is just the MM? That might just be the MM. Alright. These bulls are relentless. Are they? Yeah. I don't really think it's that fucking interesting, but I'll take your word for it. Relentless seems like a strong word for a $6 bounce. I mean, even if they give up 5,600, there's not enough. There's not enough, like, long put positioning to the downside to fucking do anything. So short puts at 95, a little bit of long put interest at 90, and then short puts at 85, right? On the upside, there's bought calls and bought puts at 5,600, and then sold calls and sold puts at 5,605. What's more liquid, QQQ or IWM? I'm not sure what should be. QQQ is way more liquid. Or more illiquid? IWM. Sorry. I'm not sure which would be better to straddle as a port. It depends. Right now, IWM because of rate cut expectations. So IWM volatility is going to be, well, lower, right? So straddle should be cheaper as long as short vol is coming in. QQQ's vol is probably going to be higher, so I would say that QQQ straddles are probably priced more efficiently. Don't you have the beta rare? You can look at like IVRV, right? On like the 10-day. I'm pretty sure you do. You don't? Oh, never mind. Sorry. Who the fuck? Somebody has a name just like yours. People already making good plays using the beta? I have no idea. I think probably with my experience with the data set, probably the learning curve is like 3 to 6 months. Proficiency is probably out at like a year and a half. People can make better plays with the beta. Yeah, yeah. I would say that the biggest thing that you're going to get out of the data is an understanding of market maker positioning and how to position with the market maker instead of against the market maker. It also shows you when other people are positioning against the market maker, and you can take advantage of that. 2 to 5 years to the pores? No, I don't think so. Hey, most of you guys have been exposed to it to some degree for quite some time, right? Do you have any Fubo options positions still? Yeah, I still have $1.50 calls, $2 calls, and $3 calls. What's the quickest way to learn what we are looking at on the beta? Well, I would look at the PDFs first, which you can get on the landing page. I would start there. Um, I mean, so, it's market data, and they are what we are giving people are financial models and probability models, right? And so your understanding of options pricing, market mechanics, and market efficiency are going to significantly impact the value of the data. So the more you know, the more valuable it would be because it is actionable data. How do I get access to the beta? It's closed now. So read my 1,000-page book first. Yes. Will it have an API? Probably not anytime soon. And to what end would we give people an API? PDFs are in the beta discussion chat and on the homepage. I think they're on the homepage. I don't know if that's pushed yet, but they should be. Thousand-page book, 3 years of stream, 3.5 to 4 years of Reddit posts. Just pull the data from the platform through code. Of course, you need to be subscribed for an API key. Not expecting that for free. Why would I want anybody to be able to pull the data from the platform, though? I don't want anybody to be able to reverse engineer it. And to prevent people from reverse engineering it, I wouldn't want them to be able to aggregate the data. Right? Tricky. That's very tricky. Ideally, so we could integrate levels into, say, TradingView. Also, TradingView sucks. You can't import data into TradingView effectively. You just have to update a fucking line every day, which is essentially the same as just moving a line yourself manually. No, you have distribution licenses, but I mean, why do that outside of professional purposes, right? And then if you are sharing data for professional purposes, you have to charge vastly different rates. I mean, no, I think eventually we're probably going to go with, you know, using Opera Direct and being an Opera vendor, but it's it's a it's a huge regulatory hurdle and infrastructure hurdle. I mean, I think the selling point's just that it has any alpha at all, which is a significant step up from literally every other data site. Where are you getting data from? I mean, Opera, but we're not like a direct vendor. You can become an Opera vendor, which gives you the direct from the exchange, or you can get data from a vendor. Getting direct pipes to the exchanges is the dream. It's pretty sexy. There's your tagline. Got alpha. Ooh. Actually like that. Oop. There goes NQ. Oh, that's it. I've peaked. Maybe. Found alpha? Take that, seeking alpha. Alpha located. Alpha located fits really well with Gamma Strike. Hmm. My baby bulls are squealing. Why are you bullish right now? The hardest part of that is, I mean, it's a monumental task to manage the direct pipeline. I thought bullish because the Fed was hawkish, but the bond market doesn't agree. And no, it was bullish above 5620, bearish below. Macro, not same like trading. I'm really not selling off. We're just going back to where we were. We haven't even filled the downside gap. The bond market's pricing in cuts. We went over this immediately after the fucking speech, but I'll go over it again. Hold on. Okay. the dollar and bonds are saying rate cuts. Powell said nothing, actually. He said, it looks like we're close to our goal, so we'll make decisions as information becomes available. He didn't say they're cutting or they're not cutting. So now we're going to get, I mean, we're likely things are going to stay fairly flat, right? Like the market's probably not going to shit the bed, but it's also probably not going to rally to the moon. And this will probably persist for the next couple of weeks until the FOMC decision, pending jobs data. So when we get JOLTS and NFP, if these are significantly worse, people will feel the Fed has not cut soon enough. If they're stagnant, we will await the FOMC decision. If they are better, bullish soft landing. This is how generally how macro works, right? Unless a long-term trend in the data reveals itself, macro just jumps from one data point to the next. So you get reaction, nothing, reaction, he said it's time to change policy, but we don't know thing. Why did you even ask? What? Yeah, September 4th and 6th. You see a walking, talking Alpha Centaur. Some more single ticket pickle picks. Hooray! Maybe. There'll probably be a lot of like options selling over the next week or two. Probably not a lot of directional plays. So more limited returns. Start of a crash? Could be. Yeah. I think if they don't cut rates in September and Yellen can continue to issue, they should be able to keep up the bullshit until like Jan. Or until the TGA runs out of money. But that'll be after the election, at which point Yellen doesn't give a shit anymore. What about the yen? The yen is up quite a bit against the dollar today. That's because bond markets are pricing in rate cuts. We've got the 3-month telling us we're going to see, you know, in excess of a single cut by the end of the year, right? But Fed fund futures are pricing in far more rate cuts by January than bonds even are. Please, bro, I want directional plays. This $400 is burning a hole straight through my pocket and thigh. You could have gone short the S&P at 56.20 today. That was pretty good. Is this still risk of blowing up the carry trade? Yeah, I mean, if JPOW cuts, the carry trade's going to probably get blown up, at least a little bit. They'll be better prepared for it now because it almost blew up once, right? So it'll be better hedged and risk has been reduced. But there is still a significant amount of risk there. Stop trying to make the Australian dollar a thing. You know what else is up, lost your gun? Gold. The bond market's significantly larger than the equity market. If gold's up against the dollar, gold's up against almost every currency but the yen. And some significantly more than the dollar. That's the whole point. Kava's up 22% today. It's the new Chipotle. I said that already. Yuda's comments sounded kind of hawkish. Yuda is hawkish. He's hawkish as fuck. Did you read the minutes? He doesn't fucking agree with like any of the other BOJ people. It's down against any. What does that tell you? You don't think we can hold 5,600? I mean, we can. We could just sit here all day. I think it just tells you the correlation between Australia's rate and the US is inverse, right? Like the yen. there's still not enough issuance there to provide the liquidity necessary for significant leverage. Are those debit spreads in trouble now? No? Why? Why would they be in trouble? They're like fucking $40 out of the money. Nice bounce. Yeah, but resistance here, and then... Well, not really resistance, just nothing here. And then a ton of resistance out at like 56.20. I'm getting some sold puts at 5,600. Sold calls at 56.05. TAC at 15? Yeah, TAC's doing good. It was sat in my buy range for quite some time. So yeah, it'll improve quite a lot on the dollar. Or at least that was my hope on the dollar dropping. My cost basis isn't super great on it. I got some like wonky entries over the last couple of months. So I'm like 1340, which isn't fantastic. Kind of missed the bottom. But I'm up about 12%. Mine's 13. Nice. It never dropped as low as you were hoping. Yeah, it didn't. So I ended up not getting not only not getting as much as I wanted, but getting like weird pricing on it. I wanted it below 1380, right? Like I was okay with that entry, but my ideal entry was closer to like 1150 and it never got there. Megaphoning? Uh it's it's a wedge, but I would say it's not really a megaphone. Barely. Yeah, it's more just like that. And it just failed to break out. These are usually bullish, but it's really slim. Like the consolidation would be considered bullish. It's it's like a, what the fuck are they called? Like a right angled descending broadening wedge. And they're not as bullish as like a descending broadening wedge where the top, but they tend to happen around major resistances, right? Because price gets pinned to the resistance level. So you get expansion as, sellers push down, but then sellers give up. Going to the Hamptons this weekend? Maybe. Why? Weird question. That's what I said. It's a wedge. Descending broadening wedge. But it is right angled. It's still slightly bullish, just not quite as bullish. It's really like 50-50, actually. 50.8% chance of breaking higher, which is not great. It's called a wedge. We should talk more about pendants. We should just not talk about technical analysis outside of its use as risk management ever. There should be a streaming channel on Fubo. Pi-Fi streaming channel on Fubo. Ooh. Wonder if they'd pay me money. Even putting percentages is iffy, right? The whole not predictive thing. Well, that's kind of the beauty of most technical analysis, is that the probabilities are so close to even that even if you were to use the probability predictively, the edge is almost insignificant. I go by Blokowski naming conventions. Blokowski calls them descending broadening wedges. That's what makes it right angled. That's why I said right angled. I'm not gonna get into this fucking pedantic argument. No, I didn't say pendant. Renew, thank you so much, man. Welcome to Cornichon, guys. Tag of 15 is still, or is it now fairly valued? I wouldn't buy more at this price. It was way above the range in which I was willing to buy it. Thank you, Renew. I haven't heard you touch on BNet in a bit. Still have interest. Just waiting for it to get cheap again. Probably like second semester earnings. I got all of my AQN position and then some at like 505. So my total cost basis on it now is like 508. I had buy orders open at 5, but I never got filled. And like 480, but those also didn't fill. Fubo about to get violent on the third test of 210? Probably not. Yeah, Smith's gonna fucking push up here or what? Oh, it's boring. Beyond is pumping. Russell's up 300 bips. Yeah. Ooh, Series almost below $3 again. Maybe I'll pick it up this time. Looks like it might fail the trend. Last Beyond pump before a reg show? I don't know, maybe. I'm gonna try to get out of my fucking the rest of my $7 calls here though. They might just be trying to keep it off reg show, and that's why it's pumping so often. Because it looks like there's some ETF covering on this move up. Not much on the underlying though. 760 would be cool. Hmm. Yeah, I don't think this move up is going to be very durable, but it could test. It could test 750. A break of 750 would be bullish as fuck. But I would say rejection at 7 or 750 is most likely. Idiot trade today. At some point, I just don't like the current positioning. Too risky. Yeah. That sounds like smart guy talk. What? So most of the time, the best trade is no trade. Don't forget about the gap at 56.16. I know it's there. I don't know how much it matters, but it is there. Your hesitation to do the idiot trade shows signs of wrinkles. I'm not gonna sell theta at the fucking major resistance. Actually, you know what I would do here? Yep. Gonna do that. I just posted it. Ban? Why? $3 fill? It's in the money. Why market crash on Monday? Who was about to break out, and they can't allow that to happen. So Thunder, when you're selling $8 in the money puts, you're not getting $3 on a $5 spread. You should be getting more than that. Don't fail. I need you to go up. That's, the mid on it right now is 3. And it's higher than it was when I opened it. I think I opened it at the bid and the ask. Pretty sure that's what option strat does. Unless it's like more than 50 wide, and then I think it opens at the low end of the mid. It's 2.8 right now. And we're trading $5 higher. $3 higher. I opened this for a test of 56.20, and then I'm going to close the short leg and leave the long put open. No, I wasn't going to hold it into close. Thunder, are you opening your spreads with market orders? I lost my virginity behind a Wendy's. Nice. No, I'm not an idiot. Okay, I was just wondering. Because if your spread is that bad, if you hit the complex order book with market orders, you're gonna get reamed in the ass. But I know for a fact that you can get a $3 fill on that. Fidelity was giving a lower midpoint at spot than you were getting. So that's but your broker's like lying about the price. Right? Just ignore the broker's IV calc and sell it for the correct fucking price. Which, I mean, option strats pricing isn't the best, but it's definitely better than your broker. Crime, where do you think the free money Fidelity gives you comes from? Fidelity's probably one of the worst for that. If we break 5620, we run. Sure. It'll be kind of hard to break 5620. We could, but I'm not sure we get much higher than like 1520. Because as like even if we push up into like 25, we're just gonna get a lot more sold calls and push back the other way. Good advice that a lot of us may not know. Quote, price improvement. Yeah. That's just, yeah, you pay more up front and you sometimes get it back. Billy's worse because you can refresh an options contract volume data and get different results every refresh. It's maddening. I think Fidelity like trickles in delayed data over time for their like historical options data. It's probably the way they like manage snapshots. But most brokers, I mean, actually almost all brokers aren't doing like truly real-time options data. That's not really their most of their focus, right? I dealt with that today on cover calls. I need to switch so bad. Yeah, I don't know. I mean, you guys act like it's like a big deal or something to change your broker. I have like fucking 30 brokerage accounts. I have brokerage accounts I've completely forgotten about. They're just like open with like $2 in them. They've been sitting there for years. I mean, it takes like 5 minutes to open a fucking account. You guys are like deliberating about it for years on end. It's like, I really need to leave Fidelity at some point. There's nothing holding you there. WeBull's okay. I mean, they're just like, they're not advanced enough on that front, right? So their pricing actually tends to be a little bit better just because their systems aren't built as well. Um, and so the like price efficiency on the broker side isn't well managed. IBKR is okay on like maybe like professional accounts, but retail accounts are still gonna Like no broker's ever going to give you the actual price of the contract, right? All of them are going to pad the spread. Gurk trades so much, he's forgot he has brokerage apps from Japan. I mean, I'm usually willing to like check a couple grand into anybody and like open up an account and see how their platform is. How do you determine gamma neutral, gamma max on the fly? You don't. They're calculated end of day. I mean, I understand enough about the math and the positioning that I can kind of estimate where it's moving based on intraday flows, but I mean, that's just an estimate. It's by no means accurate. WeBull has level 2 data on options contracts. They're still padding the spread, but they give you level 2 data. And now that TOS is Schwab, it's going to get worse as soon as they get their grimy little fingers in it. Schwab's almost as bad as Fidelity for that. But yeah, I mean, like, you can just... Webull has level 2 on options on each contract. It's still padded. You can see them padding the spread. You'll see spot move and see the padding. That's because the broker is not going to take on your risk for you, right? That's why they pad the spread. It's not because they're trying to like rob you of 5 cents. Oh, 56.15. Do I want to close it here or see if we tap 20? I guess I don't have to make a decision yet. I think we could go up a little bit more. It's the best way to reduce the risk in this. I think we get the 20 test, 2025. I guess if we fail, I open the out of the money put debit and then close the short put. BTC is just leveraged dollars. So, I mean, yeah, they lean into it when dollar value drops. Are rate cuts good for rotation into manufacturing? I see US Steel taking another hit today. I wasn't sure if that was a sector or related to their book specifically. Might be due to reduced expectations that they're going to get bought out. There's a lot of regulatory hurdles for that buyout. Yeah, but if JPOW doesn't cut, then crypto bulls get blown out. Who uses indicators in the options contract chart? Depends on how liquid the option is. If it's trading a lot, it's fine. You can use TA, well, to some extent, as risk management. Not a big fan of the weakness here. Yeah, I'm gonna buy to close. I doubt it. It would sell off at psychological levels first. I can see that happening in like a crash or like a liquidity crisis in the treasury, but otherwise, I don't think so. You see JPY almost back to August 5th levels. What does that mean for the carry trade? That's not good. The spread's collapsing. It's collapsing at a faster rate than treasuries are gaining leverage. No, I still think we have room. I'm getting a lot of sold calls at 25, which is going to be tough. But they're mostly spreads. So they're longing the call at 25, selling the call, selling the call at 20, longing the call at 25. Um, so we could push up into the long call, but then I think we get rejected from there, which gives us room to move up to 25 ish, which would be like a lower high on the day. I don't think we squeeze out the sold calls above that. And now we've got in the money sold calls also. We're getting a little bit of put selling at 15, but not a lot. Do you think we sell off into close? I think this can get rejected. I don't know how hard it's gonna sell off. I think there's a really good chance we end the day at like 15 or 20. Um, we might see, 10 or 25 somewhere in there. Would the conditions for the next couple of weeks be attractive for an iron fly on SPX? How wide? It'd have to be awfully wide. NVIDIA 0 GTE going for 8 cents, 130C. You're trying to pump your spread. Should we have enough 0 DT interest to do something still? Sure. There's 20. Nope, sorry. I was just updating the idiot trade. Is that the down you were looking for? That's the rejection I was looking for. Maybe shorts are fighting for every inch. They're just trying to flip the hedge. It's not. The doesn't want to fucking hedge the out of the money options or the Vega. So they don't want to price up IV. They don't want to price up the calls. Because it means they have to buy a bunch of the underlying. And once they start buying the underlying, they have to keep buying more of the underlying. Price is the hedge flip. It, I mean, technically it already should be. It should have flipped when we cleared like $1, $2. But if we get over 250 or the 250 starts to pick up more Vega, that's gonna get worse for the Like the MM's gonna need to hedge more. Like as the delta starts rising on the $2 call, right, and the Vega starts going up on the 250 and $3 calls, that's where it kind of becomes a problem. Yeah, they're not pricing up the out of the money calls, keeping the vol dialed down. I mean, there's definitely a lot of call sellers, right? So if any of those call sellers give up though, and like close or buy to close, it's gonna spike IV, right? And that's gonna ramp up Vega exposure, which is gonna cause the market maker to buy the underlying as delta on the contracts rises. Are you long or going to long the 10-year before the September FOMC? I have some 10 years. I'm already long on them, but I'd probably sell them before September FOMC, I think. Why buy treasury/bond before September? I have no clue what any of that means. I bought them when the yields were high. And then I sell them when the yields are low. I've done that a few times now. That's been pretty good. But I don't think it'll last forever. What are the chances we get a gap filled to 55.70? What gap? Oh, you mean on the downside, like the morning's gap? Pretty slim. I don't think we fill that today. Are Tesla puts still risky? Yeah. Shorting any of the Mag 7's risky right now. Most of them are in supportive environments. Test the low, 55.85. That's not impossible today. That's really unlikely at this point, but 55.85 is not impossible. I think we close around 10 or 15-ish probably. How's liquidity on Fubo? It's pretty liquid. I mean, Fubo's always kind of pretty liquid. Alright. So we could slide down. Test 5605 is what I'd be looking for. 56, well, 5610, maybe. And then I'd close that short put that I have open, or the long put rather. That's what's been fucking with Gamma Max all week. Wiener, wiener, peener, peener. Wiener, wiener, peener, wiener, peener. How you doing, Popcorn? No, I'm just betting. I don't need a test of 5605 to exit the 5610 put. I just need SPX to fall below 5615 to exit it. And then I'm exiting it profitably. Minus decay, but haven't gotten a lot of that. Right, so I sold the in the money So I sold the in the money 56. 15. Bought the 56.10. Right? When we went up, I closed the sold put, and I still have this put. So I sold this for like, I think it was like 15 something. Bought it back for, wow, the credit on it after I bought it back was 715. So I think I bought it back at like 8 something. And then, so I still have the debit on this. But if we fall below my total debit, then I can close it. I wasn't thinking about breaking the trade apart. That makes sense. I don't know if you can, but I think you can go back through the links that I posted and watch the evolution of it. What's up, Trash? Happy Friday. And good morning, of course. Premium Light? I haven't had any ads. Oh, nice. Dixie USD JPY are low as fuck. Yep. Yeah, they're not in a great spot. It's the end of the first week of school, and I'm already far behind on coursework. It's gonna be a good semester. Sounds like it. Oh, so you have to, like, wake up before noon now. You can click positions and then click close to see what's been done already. Oh, okay, cool. Yeah, Kava is running. Nikkei Foods are finally starting to slip too. I have a little bit of a short position on Nikkei again, but not too much. I don't trust Japan. I do, however, believe that JPAL will do the most idiotic thing possible. All of my classes are, quote, morning classes. Oh, okay. So you get home at noon, go to sleep till 2, up at 2? That makes sense. 50-point cut coming. I don't know how early your school opens. Here's a riddle for you. Win up, win down, win in, win out. Also, what did JPAL say? I was busy. He said nothing. But masterfully. He said it's getting ready to be time to cut, but we're not sure that the data supports those cuts. Will Kamala deliver on her promise to the middle class? What middle class? She's just making promises to people that don't exist. What a great platform to have as a politician. America's entirely comprised of really poor people and moderately wealthy people. And that's like 90% of our population. But all the political promises are made for this gap. You guys that don't exist are going to have the best stuff. Good for them. Life's going to get so much better for all those people that don't exist. They're going to be able to buy homes. Their non-existent children will be really happy, well taken care of. No, that you guys are probably mostly poor. Poor is like sub what 65K a year. Moderately wealthy is like 150 to 300K a year. Let's say two income households, professionals. The middle class, which doesn't exist, are the people in here. Dork is extra poor. The middle class are all bots. Yeah. I make slightly over 100K and I feel poor. That's because slightly over 100K is poor. It's just not really poor. Woo, if that's pre-tax, I'm middle class. Nope, that's net. Yep, I'm poor. 500K to a million is the middle class, I think. Well, they have the same quality of life that the middle class used to have. They own homes, they can buy cars, maybe they can invest some money. Based on the idiot trade, it seems that we're range bound into the end of the day. I actually need the price of the index to drop slightly to maximize the return on the idiot trade. That's gross. I know the middle class can't buy homes. It's because the middle class doesn't exist. You can't have a middle when you only have two classes. Gherk, stop. Gherk, what? You're offending the most important people that exist in this economy. The poors? Realtors? As a bi person, I reject this narrative. Where do I observe the so-called idiot trade? It's literally pinned to the top of the chat. There's dirt poor, food stamp poor, paycheck to paycheck poor, one tiny vacation a year poor, and ultra rich. That's ridiculous. You know, real estate agent is actually a job that I think AI could do. I think they could do it really, really well.
B.Tacoman put their pickle in my jar gag yesterday. I proposed to my girlfriend of 6 years. Part of the proposal was funded by gains taken from PP or your analyses. IDK what the future holds, but with the financial knowledge I've gained here, I know I'll be just fine. Thank you for everything, you're the best. 5.
Congratulations, B Taco Man. I saw your girlfriend's hands. Nice. Well done. Ooh, she says pee-pee? Yeah, she did. Whoa, he's a real streamer now. I've I've always been real. I'm not a bot. You're the bot. Plot twist, she said no. Congratulations, B Taco. Well done, man. I'm glad to hear it. We know about the land you live in. What? What's the MM buying some Fubu? Everyone else is doing it. Prove you're real. Maybe you've been a VTuber bot this whole time. I've never seen you in the same room together. With who? You're a talking duck with an eye patch. Why would I pretend to look like this? I mean, it's not bad, right? But it's probably like a 6, you know. All right, 7. Fair. I won't argue that. Watch Dixie and USD JPU. You're forgetting about my money. That gives me +2 to Constitution. So 9. New York 8. Oklahoma 12. You're a Midwest 9. Thanks. Hey Gherkin, it's your favorite stack and your favorite indicator. SoFi Cup and Handle, August 1st. Why? Why do you want that? Indiana 15. Indiana's about as real as the middle class in Canada. What happened with JPOW? Was he hawkish? No, he was nothing. More vanilla than the driven snow. Why are we disparaging the Canadian middle class? That's also a thing that doesn't exist. $25? Good ship transitory. Will Atomic be a top 30 world economy if Fubo hits $3? No. How much does Atomic own? I think about. Well, I think he has more shares than I do. Actually. Oh, fuck. It's probably got like 20 or K shares or something like that. I don't know. Fucking ask him. I don't know what's in his port. Disney should buy Fubo. And then use it to host their new joint venture with Fox. After they stop the lawsuit against themselves. I really want this to test 35 so we can get like a decent rejection. Or 25 rather. Well, 25 or 30. I don't really care. One or the other. Just so they can close the fucking 25 sold puts. Like if we test like 25, 27, they can close the 25, 20 sold puts, and then we can drop back to like 56.10. Find support at like 56.07, 56.08, and then close back at 56.20, which would be the perfect day. We can't enter the idiot trade now, unless you wanna. It's already up like $700 of credit. It's just the longer we chop, the further my break even gets away from spot. Also, then I can sell another call spread, but in the money, which would be sweet. NQ looks kind of weak here. What do you think the total impacts of fucking Robinhood zero DTAs on the market are? Retail represents like 2% of the trade volume. You gotta stop reading Bazinga articles, my man. Contrary to popular belief, this isn't retail's fault. You know a phrase we don't hear anymore? Max pain. I don't use it because it's a bad measurement metric. Is T-Pain still around? Do you read any newsletters or stuff like that? Yeah, I mean, I pay attention to all the news. I just don't believe any of it. What's a hat with the hair attached? What the like a wig hat? I wonder if I should buy one of these puts. Full on wig hat? Yeah, that doesn't. Why not just. Why didn't they just put a wig on? Never mind. You know what? Should I buy another one of these pets? Ooh. Well, I should have bought another one of these pets. Too late now. Yeah, I could. I wanted us to move higher so we would have had more momentum on that drop. I don't actually like this drop. This is gross. Now we need to lose 56.13 to drop lower. The rich people in America are obese too. Give me my 56.10 test, you fucking bitch. Maybe now we can test 25. That was what we needed. Why are they gonna fight for 20? This is fucking lame. Vegetables and non-processed food ain't cheap, if I'm being honest. I eat both of those things and I'm still fat. There's a little gap up there. It's super tiny. Too much cheese? I do love the cheese. No, it's literally zero exercise. I sit in this chair like 20 hours a day. That's as bad as smoking? Worse. You need the spinning bike that powers your computer or else it turns off. I would just have a heart attack. Why are you trying to kill me, Bob? Okay, I'm gonna buy another one of these pets. I know it's a bad idea, but I'm gonna do it anyway. I have a standing desk. I even have like an under desk elliptical. I don't like it though. It's a piece of shit. I have a dusty rowing machine. I have a treadmill. And I have a $250 a month gym membership to a gym I never go to. Well, what am I powering? The defibrillator or the computer? See your chair wiggling a lot. You're making your legs bounce up and down a bunch. Do that more. I do that all day. I just need to pay somebody to force me to exercise and to like not do other things. I'll come yell at you if you pay me. Just go get an Ozempic script. I don't want to take that shit. Get a wife. I'll pass. I've got enough problems. Keto is great until you're tired of making bulletproof coffee. I usually only eat like one meal a day or like a snack or on the rare occasion nothing. Coke is Ozempic for the rich. I do Kegels all day. How big is that meal though? I don't know. It's like a full meal, like 1,500 to 2,300 calories probably. I used to go to the gym, but now I'm just too busy. And I'm like, when I turn the lights off from the stream, I have I have like no energy. Like I'm just like a zombie for like 4 hours, and I kind of snap out of it, and then I have more work to do. It's because you don't sleep either. Well, that's because I'm busy. At some point in my life, I'm going to go to sleep and never wake up, right? So I feel like sleep's covered. What am I paying you for? I knew you couldn't be from New York and not be a Nos fan. Nos is the shit. Atomic has over 100,000 shares of Fubo. Wait, really? Jesus fucking Christ, man. What the fuck? Never, you know what? Maybe he has a $0 cost basis. There's legitimately some sort of psychological thing with sitting under like stage lighting all day. I don't know what it is, but the second I turn them off, I'm like, I'm dead. I turn into a zombie. Like when they're on, plenty of energy. I could go do anything right now. Run a marathon, talk shit. Turn them off, zombie. The other day, I just sat here and stared at my wall for like 4 hours. They tested that in a lab? What happened? Did the person bash their head into a concrete wall? Leave the lights on until you go to bed. Something, circadian rhythm. Yeah. I don't like it. And I don't want to go back to that fucking shill at the sleep clinic again. That guy was an idiot. No CPAP. He just wouldn't give me anything to stay awake for longer. I was like, I have an energy issue from like 4 p.m. to 10 p.m. And he was like, well, maybe if you slept for 6 or more hours a night. And I was like, how about you just give me some stimulants so I'm more awake? You sleep apnea? No, you idiot. I don't sleep at all. No, I can't take Adderall. It's no good. The point of the sleep clinic is more sleep, not less. I wanted him to help me maximize the sleep I'm capable of getting. I wonder if instead of like a blood boy, I could get like a cerebrospinal fluid boy. Like just have someone that sleeps a lot just wash my cerebrospinal fluid out every day with theirs. Cardiac issues are for poor people. Give me the prescribed methamphetamine. Like an oil change? Yeah. You sound like a villain. How? Have you tried taking a 30-minute walk? Yeah, I was doing that before we decided to start a fucking company. I was going out after the stream every day and walking for like a couple of hours, and it was awesome. But now I can't do that. Now I have to do other things when the stream ends. How much would you pay me to do that? Transfer your cerebrospinal fluid with mine? We'd have to make sure we're a match, Greg. But I don't know, like, I assume a salary. That's all you need, right? You just need someone to swap with you so you can wash the gunk out. Gherk, you are the villain. It's why I'm here. I can't take melatonin. If I take melatonin, I fall asleep for like 20 hours. I got a spinal fluid guy if you need his info. Yeah, actually. You don't want the scarring. It would cause eventually both of you would be paraplegic. Hmm. Well, why? You only need to you just put a top on there like a colostomy bag, right? You don't do a spinal tap every day. Like a maple tree? Exactly. I don't like drugs. Outside of my low grade stimulants. Could we just break up to 5630? Jesus fucking Christ. Apparently not. Somebody keeps selling calls at 5620 and it's really annoying. Don't do what? I don't even know anymore. Could you admonish me for buying October 40p on Upstart just now? Thanks. Let's see. I don't think there's. What's wrong with that? Oh, 25? Got a new high. And rejected. Motherfucker. Shocker. RFK Jr. is dropping out and endorsing Trump. Okay. There goes Dork's only candidate. Only one candidate with brainworms now. I still have my cat's asshole. Nice. I just like one candidate's character and the other candidate's policies. Fuck my life. I dislike our entire government. Gherk, stop it now. I will not. What if we just had a new government that was better? America 2.0? Sure. Everybody here is getting mad at the system, but then they're going to call me a nut job for saying that's a good reason to vote third party. And then you're going to time me out. Listen, your cat's asshole isn't winning the election. And playing by the rules to affect change is so much more boring than just a bunch of people die and we get a new system. See, the problem in your analysis is compassion. And it's lame. We've got too many people anyway, right? Want houses to be cheaper. Get rid of more people. Thanos for president. I'd vote for him. Can't we just elect a dog to be the president? Yeah, but somebody's just making up the rules for the dog, right? 5530 is not getting breached at this point. I didn't expect it to. I just wanted us to move up to 2527 so then we could reject harder. Atomic sold 10,000 $2 cover calls. Nice. Who's playing that game? That's not what I'm saying. I'm saying burn it all down. It sucks. Ooh, here we go. Then your dollars will be worth less. I'll turn them into euros. We have the best politics money can buy. The market lives or dies by Nvidia's earnings, then it'll live. Or the least competent money can coerce. We have the best Supreme Court justices money can buy. Too much power in the judiciary. No right to education. Our constitution's a pile of shit. You bearish for next week? Not really. Significant impact on Fubo if it closes above $2. People will probably exercise their $2 calls that expire today. Well, some people will. How's positioning into close? We've got sold calls in the money at every strike down to 56.10. Sold puts at every strike from 25 all the way down to like 5,500. And then sold calls, big piles of sold calls at 25, 30, 35, 40. You thinking we'll have a face ripper of an end of day? No. That's my chances for my 170 Google calls expiring next week. Meh. Google doesn't look that good. How does that put charm? It's pretty even at spot. I would say it's not going to have a huge effect. Might be a little negative if we lose 56.15. Is there a lot of bot calls? There's basically no bot calls on the chain anywhere. 56.05? No, sorry. 56.95 or 55.95, 5600 are the only significant piles of bot calls. I said in the money, well, there's in the money sold calls and out of the money sold calls. So there's in the money sold calls from spot down to 56.10. There's out of the money sold calls from 20 all the way out to like 56.80. If those are the only calls, what are we doing up here? The puts are sold. All the puts from 56.20 all the way down to like 56 or 55.80 are all sold, and shitloads of them. So price drops, everybody sells puts. Price rises, everybody sells calls. Price drops again, more puts. Price rises, more calls. Price falls, more puts. And then we just do that all day. It's not a pentagram. I'm trying to summon the witching hour. some skew analysis is already implemented. Put in flaps. So if we all buy stage lighting, will our trading results be supercharged like yours? I don't know. Try it. Just shine a flashlight in your face all day. Or 4 of them. Hey man, skew you too. Whoa. Whoa. Don't come and attack my convexity like that, alright? Could you take a look at GTLS? Why? How much does it cost? I probably don't have data on it. Sounds shitty. Oh, son of a bitch, I do. Wow. That's not doing great. There's not a lot of options flow, per se. Looks kind of bearish. Gamma's getting a little closer to spot. It's got a lot of in the money positioning. Gamma and Delta are pretty negative though. How's Carvana looking going into next week? I mean, Carvana's kind of topping out here, but maybe it'll pick up some more call interests as positions roll over from the weeklies. Oh yeah, dump it. Squeeze out the sold puts. Let's go. This is a little better. 22. I'd rather dump from 22 than 18. Although it's not a lot better. It's still going to be hard to break below 15. Dollars at 100.7. Here's the next downside support on Dixie. Major levels. $101. 100.61. So we kind of already broke through that a little bit today. $100.56. On 100.02. This took forever. That's not even that strong of a push. We still need to break below 115, 56.15. So we need to lose, like, to really get this going, we need to lose like 56.13.40. Otherwise, we can just stay 15 to 20 for the rest of the day, which would suck. Oh, nice little spike in volatility. I'd like that to keep happening. The video plopping, yeah. NQ 19725. That's a good target. What is that on ES? It's like 56.30. Really like to see it lose 56.20.50. What are the implications of Dixie being this low? It's not that low. It's crazy high still. In 2021, the dollar was at like 89. Dump it? Yeah. That's what I'm hoping for. Squeeze out some of these fucking... Oh, there we go. Yeah, do it. I want vol to spike more. I don't like all these fucking gaps. Yes, NQ's a bag of shit. Let's do it. No, don't bounce. Sell off harder. Ooh. Out of the money short puts are closing. getting squeezed a little. We need to go lower, but they are getting pressured. Hmm. I think NQ keeps selling off. That'd be super cool if we lost 5610. God damn it. Hmm. So close. After 6 months of live trading, my tiny account is at break even. That's pretty good. Yep. Not losing money. It's key. I set up a straddle with unsettled funds. I should be able to trade it on Monday. Because my cash is settled by then. Yeah, that's correct. That shouldn't. Yeah, that shouldn't give a. If your funds are settled, then you won't get a GFV for closing the position. It's if you open and close a position with unsettled funds. Oh no. We don't have time for a reversal. Don't do that. Fuck off. Your boy Carvana blasted off today. I know. It's still got resistance at 57.50, 160. Hmm. Do you have Hal Greeks by any chance? Somewhere. Yeah. Gamma neutral's at 32.39. DN is at 33.39. Positioning is getting a little bit more bullish, but everything's still pretty negative. Gamma max is at like 35. God fucking damn it. If we're going for this gap, I'm gonna sell another fucking call. Still no 25 test. It's so shitty. We still have like an hour left. Probably gonna get more short calls here. Charm still turns negative under 56.15. Charm's positive if we get above 30 though. Ooh. You don't think it breaks out here and heads to 40? Not particularly. Mm-hmm. 56.28 is better to fall from. Yeah, significantly. But we still need the rejection part of that. Vol spiked right there, so we might get it. It's like triggers short put capitulation. A short put capitulation would swing us back the other way. It's a good way to manage far to the money vertical spread that's red. Turn it into a butterfly. Yeah, you can do that. Well, they're just on exiting once they reach my risk. You could do that too. You can turn it into like a diagonal. I can reduce some of the loss as well. Quick recap. I think you could just rewind the trade and see how it progressed throughout the day. Just short a bunch of out of the money puts right now, or long a bunch of out of the money puts, and I have some 25-30 call spreads. I'm waiting to see if this breaks down to the low point. $5,600 test would be cool. The rally in tech was weird. This would probably take a little bit longer to break down, though. This does not look particularly bullish for next week. Lower high, consecutive lower highs. Oh, maybe like the early part of next week's kind of shitty. Doesn't matter. Mm. Trying to get some in the money bot puts. 30. Mm. I buy the put instead of selling more calls. I probably will sell more calls. I just want to buy the put while it was cheap. Give the calls a minute before I sell them. I want to make sure this is going to break back below 25. I'd still like to see a test of 30 here. Yep, sorry. That's interesting. Hey, we tested 30. What's with the late day push? Calls out on Monday. Positioning. If I had to guess. It wasn't a secret top. I said we could test 25-30. Just, unfortunately, we had a breakdown before we did it. Would have been much better back here. Yeah, looks like mostly bullish positioning for Monday. $25, $20, $25, $30 calls for Monday. It's just anybody buy puts for Monday because the dollar's still dropping like a fucking rock. Yields are moving up though. Well, a little bit. Correlation bottoming out. Carry trades dumping. That's interesting. VIX below 16. Load up on the September FOMC pooties. I mean, VIX 3-month is still really high. It's like 18-20. I don't think I want to buy Vega puts here. Hmm. We're selling in the money puts at 40. They're buying Monday calls 40, 50, 45. Too much delta on the Monday expiration. Still have 30 minutes left till close. Will they hold them over the weekend though? I don't know. The 2025s, they might not. This is the secret top. Selling the at the money put. Still a fuck ton of in the money calls here. Hmm. Later, rabbit. Why my zero DT hadn't got. I wish my zero DT hadn't gotten stopped out. This is impressive. What the fuck was that? Oh. Jump off from here. We'll see. I mean, I don't think we dropped that far, but like back to like 20 or 15's possible. Depending on momentum, maybe lower. But we need a lot of momentum. We gotta shake out the long calls on Monday, which is gonna be maybe tough. Maybe not. Mhm. Shake them out. If we squeeze out the 25 sold puts here, it's gonna be fun. There's quite a lot of them. Where does the MM with this? Probably around like 56.15, 56.20. Might be a little lower than that. But like right here. Uh, Ooh, dispersion's turning around. Q gonna fucking dump this? Yes. Need to get to 56.23 to squeeze down. No. 22.50 actually. 22.47. 23 would probably do it though. Couple of minutes. 4 minutes. Why market crash on Monday? I think there's like a small chance that we pull back into the beginning of next week, but the end of next week would probably be kind of bullish. End of month. There we go. Now squeeze them out. Push. Bulls have the leverage on charm here. Just a little bit. Or bears, rather. Two more minutes. Maybe not even. Oop. 53. Or 23. 24.60. Puts are already squeezing out. 30 more seconds. Dump. To the second. That was pretty spot on. Red candle. Clip it. You could get support here. I mean, this is 20, right? Might jump again on the test. We could get rejected off of 25 now. Well, they're gonna sell the put here, right? So they sell the 20 put, try to push us back into the sold puts at 25 because they didn't squeeze off. Well, not entirely, right? They squeezed off a little bit. But if we fail again on the bounce, we're gonna squeeze off the puts they're selling at 20, right? It was a good bounce. And then take profit on the 25 sold put. Or sell more of them. Sell more of them. Interesting. That's risky. Fucking bulls. Look at that. Yoink. Yep. Come on. Squeeze off all the 25s they just sold. That'd be fantastic. Christ. You see this in the data beta? I'm watching it right here. Come on, buy another one of these puds. Hmm. Trying to sell the 30 put. I'm long all the puts at 25. Mm, oh shit. Well, motherfucker. What the fuck was that? That was crazy. What the fuck is any of this? Hmm. Q got rejected off of 19.812.50. $56, 57, 75. Two and a half minutes left. Oh, MM does not want this up here, right? Mm, that was a crazy fucking candle. Yeah, they're gonna lock it up here and then dump it after hours. Fuckers. Ding. Ding. There it is. Ding ding. Lame. Alright. Well, that was shitty. Just that. 21, 22. Ugh, hold on. 266, 750. 15, 19, 520. Wait, what happened? No. Wait, did the stream cut out?
Vega Riku.
Oh. Sorry. All right. So SPX ended just above the top of the expected range for the end of day, closing at 56.34, largely due to Monday positioning. It was a bit high over the MM's hedge, so we'll probably see that this is a peak, local peak on futures, maybe a pullback to like 56.20 by Monday market open. Yeah. Interesting. Volatility shorted pretty heavily into the weekend. Commodities up, big move in futures, big move in precious metals, but agricultural commodities declined. Dollar kind of flat after today's drop, trailing off a bit here. The next major support on dollar, I believe, is down at 158, something like that. 100.55. So we're pretty much at support. We dipped a little bit lower than the prior low. So I would say we could see it drop as low as under 100 soon, but probably not right away. Might have to wait on more data for that. Correlation kind of ground down into the end of the day. They managed to reverse what would have been a breakdown in it. around 30 minutes before close. And they pushed short vol all the way into close, and the Monday for 56.35 through 56.45 contracts. Carry trade breaking down alongside the dollar. Forward yield on volatility back to negative, just slightly at the end of the day. Bond vol down a little bit today, so actually correlated with the drop in 3-month correlation. Tail risk hedging pulled back pretty significantly last night. 78.33% of the S&P over its 20-day moving average. VIX correlation ended the week actually slightly, 0.01 more positive than the prior week, but correlation there is still really high. And this might be the most interesting data point. We have 0.92 rate cuts priced in by January, which is about 3. If we get that 4th rate cut priced in, it's going to be because people think there's going to be a recession and we're going to need to cut rapidly. And so as we get closer to that kind of 100 points of cuts, things are going to get a little bit more bearish, especially for tech. Probably a little bit more bullish for IWM. Can you say bullish stuff about Fubo? As long as IWM continues to perform, it'll have at least some positive support on it. I think honestly at this point that's probably why it hasn't failed $2. But that's good for it and the ability for it to continue to move up the options chain and start to expose some of those longer dated calls and a little bit of that Vega risk. It still needs to break like $2.50, $3 to get that bigger leg to the upside. And volume is diminishing right now, and they are trying to short it back down. There's a lot of selling of the call at 2. However, if we do break higher, those calls being sold at 2 can squeeze out, and we could get a much bigger move. So we'll see how Fubo goes. I think all the news surrounding it's pretty bullish. I think there's some decent interest in buying it. It may get up to like 230 or something and stagnate for a bit before moving higher, but what we are going to have is a lot of loading up of the ETFs, and that could mean that as we move into the ETF FTD period starting towards the end of next week, that Fubo may get a little bit of a boost from that. Usually there's not enough demand on liquidity on Fubo for the ETF FTD period to really be significant, but this time there might be. And I think that's about it. Yeah, Breath just did really well today. Double top on RSP at 174.30. Anyway, I'll see you guys on Sunday for the member stream. Thank you so much for tuning in. I hope everybody enjoys their weekend. Later, guys.